And what Wall Street Bets, which is really driving this, what they've done, that's a site on Reddit. What they've done is target large short positions.
$2.75 billion in losses.
Both Citadel and Point72 have infused something on the order of close to $3 billion into Melvin Capital.
On July 21st, AMC rose 100% to $8.80 after hours. This came after the news that a judge declined to approve a settlement for converting APEs to common shares of AMC. Does this signal a repeat of the insane rally back in June of 2021? Note that several other meme stocks are also making waves. Carvana shot up 100% this last month, and DWAG rallied 50% in one day. Many people will be looking up news about the judge's decision on the AMC settlements, but we cannot deny that AMC is a meme stock, which means that fundamentals and technical analysis just don't matter all that much. Over 500,000 people subscribe to the AMC stock group on Reddit and seem intent on making another comeback. Keep in mind that there have been several false calls as AMC has only been decreasing month over month until now.
But AMC's new preferred equity unit, also the acronym is known as APEs, could provide much needed capital to the largest movie chain in the country, and that would be AMC. Every AMC shareholder as of end of day last Friday were issued the new APE shares. They were supposed to be appearing in their brokerage accounts today. Instead of a stock split where AMC would be split into 2 shares, instead shareholders should now hold 1 APE share for every AMC share they own.
We're back to retail investors versus institutions that still seem insistent on capturing profits with short sales, a worthy cause coming from the underdog. So what now? My advice for anyone watching this is to never bet against the meme herd by shorting on margin. Naked calls may be the most catastrophic move any retail investor can make. They even brought down those hedge funds. The reason we don't hear about this as much is that brokerages rarely give retail investors the ability to invest at the highest level of risk, shorting on a margin account. But after investing for 3 years and making my first $1 million, I applied and was approved to sell naked calls. And the first move I made with that was my worst. I sold naked calls on AMC. When a stock's implied volatility is high, the premiums are also higher, and I opted to sell calls far out of the money. I had sold over 100 naked calls. I knew and understood that shorting naked calls provides infinite risk. I just thought that happened in theory, when really, I ended up not being able to afford it. I did not anticipate the impact of the implied volatility of a meme stock like AMC exponentially increasing the cost of my shorts. I was contracted to provide over 10,000 shares of AMC. On June 2nd, AMC reached a high of $72.62 and closed at $62.55. Combined with the midday adjustments of the maintenance requirements by my brokerage, as did many others, this led to a margin call that pushed me to either add over $1 million to my account or liquidate it. It was all the money I made in the last 3 years. Gone. And remember, this was all to capture a profit of just $2,000. I lost over $650,000 from those AMC shorts that day. I'm not a financial advisor, but if you or anyone you know is thinking about naked shorting AMC now, please take me as an example and just don't do it. Limit your risk with covered positions or spreads if you like, and never over leverage in margin accounts. Unlimited risk can mean more than you think. If you like this video or would like to hear more about my story, especially after that absolutely devastating loss, please like and subscribe to help me make more content.
Joe, what do you do about this? I mean, if you're a fundamental investor, you obviously you don't even know what to do. If you maybe just want to play the psychology of it because it's fun and it's a game, I don't even know how to even really start this conversation in a meaningful way.
Well, the first thing you don't do is you don't short these stocks.